Hello, investors. Today's story has got to be about Apple stock. I'm Stuart Cruz, and welcome to Cruz Asset Management's video chart of the day. And Apple stock had a market cap of $2.1 trillion. It just went through a 4-for-1 stock split. And to put some of these things in perspective, I'm going to show you, you've got an Apple, Amazon, Microsoft, Alphabet, Facebook. These are their market caps. So Apple at $2.1 trillion. You have Amazon and Microsoft at $1.6 trillion, Alphabet or Google just over $1 trillion, and Facebook at a paltry $769 billion. The important part about this is I wanted to show you the scale of this. So here's a chart of the market cap. We're going to look at an increased version. So since the lows of March 23rd, Apple's market cap has increased 118%. Facebook up 82%, Amazon up 74%, and so on. You can look at the chart. There we go. But what's driving this? I mean, really, what are the fundamental characteristics that are driving this? So really, it should be following revenue or profit. So if I'm going to put revenue up here on the chart, what I see is, while I see Apple's market cap has grown at 118%, Apple's revenue has grown 2%. 2. Amazon's revenue has grown year over year by 8%, even though the market cap's up 74. So I'm going to put up a chart of all these top S&P 500. Here's Apple, Amazon, Microsoft, Google. Here's their current market cap. Huge numbers. This was their market cap as of March 23rd in the bottom of the markets right here. Here's been their market cap growth since then. So what I'm saying here is Apple has put on a market cap of $1.1 billion in 5 months. Now, that's larger than any company in existence as of March 23rd. So just 5 months ago, there wasn't a company bigger than the market cap that the Apple has added since then in 5 months. And what's driving that? Well, their revenue growth of 2.3%. That hardly seems in line with what we're actually seeing in the economy. I get Apple's a great company and it's making a lot of money, but should its market cap or the valuation of the company grown by more than double and grown by every other company on the planet, including the likes of Amazon, Microsoft, Google, Facebook, added that kind of valuation in the last 5 months with a revenue growth, year-over-year revenue growth of 2.3%? Now we have Amazon growing at 14%, Microsoft 6%. This negative 20% here is Berkshire Hathaway stock. The only company that's really grown at a decent pace besides Amazon, which you might expect during the lockdown because of all the online orders, is NVIDIA. So that has a nice growth of 20%. But some of these companies are even in the negatives right here. Berkshire, Visa, J&J, surprisingly, MasterCard, all negative. You've got humongous growth of market cap and negative returns of revenue. So Apple's market cap grew at 1.1%. The cumulative market cap increase since March 23rd has been $10 trillion. Apple grew at 1.1 trillion. So it's been responsible for almost 11% of the overall increase in the stock market. Just these top 5 companies, 2, 4, 6 companies, that's these top 6 companies are responsible for 1/3 of the entire growth of the economy or of the stock market. Just those 6 companies. So there you have your kind of FANG companies, and you have NVIDIA that did have a nice market cap increase as well. So that's been up there, PayPal up there. But really the revenue stream has not kept pace. Some positive numbers for sure, but some negative numbers. And overall, this is an average revenue growth of 1.7% to here, with an average market cap growth of 50%. Does that make sense? to you? What happens when there is a reset? I don't know when it's going to happen, but it's going to happen. These kind of numbers are reminiscent of 2000. Now, these companies are making money and have revenue, so that's for sure a distinguishing situation. But at the same time, the valuations seem to be a little bit out of control. And at some point, there's going to have to be a reconciliation. But for right now, Apple keeps marching on, Amazon, Microsoft, everybody keeps marching on. We keep hitting higher highs just solely through PE expansion. But at some point, there's going to have to be a reckoning where it's going to be a return back to some sort of realistic number. And that's probably going to happen when interest rates start climbing up. Okay? So we'll continue to ride the wave, but this is Stuart Cruz with Cruz Asset Management on our video chart of the day, looking at Apple and its expensiveness. And don't forget to invest with the odds in your favor.